Good morning. We'll begin with the revision for accounting. Before we start with revision for accounting, let me tell you, this is not a new learning class. Hope you have learned already. Some people would not have made it in the last time. Some people would have been trying for the first time the CA inter examination. Okay, already you would have taken up classes elsewhere or with Bharadwaj, or you would have learned by yourself also. Okay, so these are the properties of students I'm having. I hope any new learner is present. Any new learner is present in the class? No, that is good, because for a new learner, this revision may not be a suitable kind of a thing. Yeah, the students who are in online, I request you to raise the hand only when it is required. Do not disturb me by annotations. Okay, all those things. It's a class of disciplined one. Okay, it's a class of learning for purpose only. It's not for playing over here. If anybody is just come on a casual basis just to spend some time what these people are doing, what Bharadwaj is doing, let me to go and collage something and the attitude kindly exit the meeting. This is not for you people. We are going to have this particular revision session sincerely or religiously kind of a thing. So that is number one. Number two, the revision sessions for accounts, it is kept for 5 days. That is today and tomorrow by myself, Saturday and Sunday by Deepika ma'am. Then whatever is left over will be done on Sunday by myself and of course by Deepika ma'am kind of a thing. That's why we have organized this particular session for 5 days kind of a thing. That is about this particular revision for accounts. So what we are going to do today is, number one, every day we will start with a lengthy topic. Today let us start with which one? Accounting from which one? Incomplete records. From that, short 10 to 15 marks questions are there. Here students face some difficulty, especially where to start, where to end. That particular difficulty is there. We will recollect, and you will have a doubt with respect to bills receivable, bills payable adjustments, when it is discounted and dishonored, what to do. Okay, where to adjust all those things, especially where to start. Some problem we start with debtors account, some problem we start with cash book, some problem we start with creditors. How to identify those things we'll fine tune. Then we will see departmental accounts today. That is also connected with preparation of which one? Final accounts. Okay. Then branch accounts, either we will start it today or we will continue in the tomorrow session kind of a thing. Then the lengthier topic branch accounts, then with the lighter topic which one? Loss of stock. Okay, that we will do tomorrow. Then I will also arrange additional materials to you depending upon what we complete today. Depending upon what we complete today. Because it is in hybrid mode, this is the first time we are doing. Normally it's in physical class mode we used to do. There the speed of the class will be different. In a hybrid mode the speed will be different kind of a thing. The other portions will be done by Deepika ma'am. Further the material will be shared separately for you. Then cash flow statements, then accounting for hire purchase, I will be doing either tomorrow or on Monday, depending upon the syllabus completion or the target completion, we will be doing kind of a thing. Okay, so this is the thing. So let us begin with which one? Accounting for which one? Incomplete records. So as of now, I understand that you all prepared but not thoroughly. You are having some doubts, you are having some knowledge, at the same time some doubts as to where to start, where to end kind of a thing. Okay, what is the first method of preparation? Statement of affairs method, otherwise called as which one? Balance sheet method, we call it as comparison method. We compare two balance sheets and find out what? Net profit or loss. Simple, maybe in 1 minute introduction, maybe you would have seen this elaborately in your regular classes, just an 1 minute introduction. Just go to a local Malige shop person or a provision shop owner, ask him, accounting records, he will say it is not available. But those people will have a strong memory. Even if 1 rupee is due, they will remember. That person should pay me 50 paise. This person should pay me 1 or 1.5, like that. They will have a strong memory power. Based on the memory, they give the information, number one. Number two, bits and pieces, some information will be available. Bits and pieces, some information will be available, like debtors register, creditors register. They will not know. They will know, okay, these are the people from whom we purchased goods. Goods purchased like that. These are the people to whom we have sold the goods, small check books, pass books, some notebooks, etc. They would have scribbled. So from the available records, we are making out the accounts. Okay. So simple. At the beginning of the period, you ask their assets and liabilities, either through some vouchers, details available, they will be able to tell you, or from the memory, they will be able to tell you, okay, what is the value of assets, etc. Then Transaction during the year also, from the memory only we take it, and from what? Bits and pieces of records that are available, we take it. So that is not authenticated, no evidence will be available, no voucher, no journal, no ledger, no evidence is available. This will not be accepted by anyone. Whether income tax authorities will accept? No. Whether banker will accept? No. Whether it can be accepted for any legal purposes? No. Maybe for first year they can make out the accounts like that. From the second year onwards, you will insist on maintaining what? Proper books of records. So prepare balance sheet at the beginning of the period, balance sheet what? At the end of the period. Then prepare the statement of profit. How to prepare the statement of profit? Simple. Take the closing capital. Take what? Closing capital. Then what? Add drawings made during the year. Add drawings made during the year. Less what? Opening capital. Then eliminate capital introduced during the period. Eliminate what? Capital introduced during the period. Why? Because that is not profit. Why? Because that is not profit. That is the capital. You will get profit or loss for the period. Sometimes in the exam, they may give you a partnership form maintaining in single entry. At the time, you may find interest on capital and what? Interest on drawings. Which one is an expense for the firm? Interest on drawings is an expense, or interest on capital is an expense? Which one is an expense? Interest on capital is an expense. Interest on drawings is an income for the firm. Okay, that should also be adjusted. That should also be adjusted. We'll be doing a problem based on that also. So prepare balance sheet at the beginning of the year, balance sheet at what? End of the year. You make the differences, that is called as what? Net profit, after adjusting all these things. There are 2 or 3 things which you have to know. When they give you adjustments, is it pertaining to end of the year or beginning of the year? End of the year. Adjustments regarding provision for bad debts or depreciation or outstanding expenses, unless specified in the exam problem, that relates to which one? End of the year only. End of the year only. That is number 1. Okay, sometimes they will give you value of assets without depreciating. Value of the assets without what? Depreciating. Sometimes value of assets would have been with what? Depreciation. Okay, that you have to make out depending upon the examination situation and question. Okay, for example, land and building, opening value 2 lakhs is given, closing balance 1,80,000 is given. You analyze cash book, passbook, additional information. Nothing is given related to purchase or sale. Opening balance was how much? 2 lakhs. Closing balance 1,80,000. They have not given any information about purchase or sale during the year. So what will you do? You will take it as depreciation. Suppose if they give you any purchase or sale during the year through the cash book or through the additional information, at the time you can make out what is the profit or loss on sale, what is additional assets purchased, or what is the depreciation charged on the asset, like that. So if nothing is specified for the depreciable assets, the first option should be depreciation. Plant and machinery opening balance 5 lakhs given, closing balance 4 lakhs. If no adjustment is given, the difference is taken as what? Depreciation. For all the depreciable assets, the first choice will be what? Depreciation. But anyhow, that will have a lesser impact on statement of affairs, because we are going to prepare opening balance sheet and what? Closing balance sheet. Based on that, we are going to work out. Okay. So we'll do a problem based on that. Before that, let us go for a quick recap. How to find out cost of goods sold? What are the 2 approaches? Basic +1 +2 approach. Opening stock plus purchases plus direct expenses minus what? Closing stock. Or sales minus what? Gross profit. Sales minus gross profit. Now in the CA exams, they may add some difficulties over here. They will not directly give you cost of goods sold or sales. So where you have to prepare creditors account to find out what? Credit purchases, then find out cash purchases, then with opening stock, closing stock information available, you can find out which one? Cost of goods sold. Sometimes we may start with which account? Creditors account, find out purchases, then work out what? Cost of goods sold, then add profit margin to find out what? Sales. That we will split into cash sales, credit sales, like that. So it depends on your exam questions. Go to this. It's a very basic question. I request you to try to work out. What is the cost of goods sold given? What is the cost of goods sold given in the problem? Not available. So we are given with which one? Sales. What is the sales given? 90 lakhs. Okay, what is the profit given? 20% on cost. This one, many of you might have a confusion. If cost is 100, profit is how much? Profit is how much? 20. Selling price is 120. So what is the relationship profit on sales? What is the relationship profit on sales? 20 by 120. That's what you say. 1/5 on cost. It is equal to what? 1/6 on sales. 1/5 on cost, we call it as what? 1/6 on sales. Since sales is given to us, we have to apply 1/6 on which one? Sales. So sales into 1/6 gives me profit. Eliminated, you get which one? Cost of goods sold. What is cost of goods sold? 75 lakhs is your cost of goods sold. What is another formula for cost of goods sold? Opening stock plus purchases minus what? Closing stock. What is opening stock? Given 18 lakhs plus purchases we do not know, minus what is the closing stock given? 20 lakhs. This is your cost of goods sold. What is your cost of goods sold? 75 lakhs. Solve this, you will get the purchases. What is the purchases? 77 lakhs. Purchases 77 lakhs. Any doubt in this on cost on sale relationship? Right? If cost is 100, profit is 20. Cost plus profit is selling price. 1/5 on cost, it becomes what? 20% is nothing but 1/5. 1/5 on cost, it becomes what? 1/6 on sales. 1/6 on sales. So, cost of goods sold, by applying that, we get which one? Purchases. Done? Next. So completed this, you can try the next question. If opening stock is 17 lakhs, closing stock is 10% more than the closing stock, purchases are how much? 41 lakhs, goods sold 25% on sales. They ask you to compute which one? Sales. Normal student thinking will be like this. What is opening stock? 17 lakhs. Plus purchases, how much is given? 41 lakhs. Minus closing stock, 10% more means 18 lakh 70,000. Okay, this will give us cost of goods sold, right? 17 lakhs plus 41 lakhs minus 18 lakh 70,000. This will give us which one? Cost of goods sold. What is the amount you get? 39 lakh 30,000. Okay, this is a normal student thinking, but a CA student should think in a different way. Listen, what is your purchases? 17 lakhs. Your closing stock is more. What is the meaning? Oh, purchases how much? 41 lakhs. Okay. Purchases 41 lakhs. Okay. Your closing stock is more. What does that mean? You have not sold out. If there is an increase in stock, that much of stock is not sold out. Less increase in stock. What is increase in stock compared to opening to closing? What is extra increase? 1 lakh 70,000. 39 lakh 30,000 you will get. Directly also you can take. Clear? We purchased for 41 lakhs, sir. Compare the opening stock to closing stock. It has increased by how much? 10% means 1 lakh 70,000. Extra stock is there in the godown, which means you have not sold out those goods. So this will give us what? Cost of goods sold. This is a shortcut way of doing. If you are able to understand it, do this. Otherwise, go with what? Normal method. Because by attending the revision class, you should not spoil your existing knowledge also. Okay. So 39 lakh 30 is the cost of goods sold. Add profit. Profit is given on sales. Okay. If selling price is 100, what is the profit given? Profit is given on cost or on sales? Profit is given on sales. 25% on sales. Profit is 25. Cost is how much? 75. That's why on sales, if it is 25%, that is 1/4 on sales, it will be what? 1/3 on cost. If you make out the ratio, it will be 1/3. Clear? 1/4 on sales, it will be what? 1/3 on cost. So 1/3 on cost. So work out 1/3 on cost. You will get the sales. 52 lakhs, 40,000 is your sales. Right? Cost of goods sold, opening stock plus purchases minus closing stock, we get 39 lakh 30,000. Profit 1/4 on sales, 1/3 on cost. So we get sales 52 lakh, how much? 40,000. 52 lakhs, 40,000. Done? Try the next question. Those who have completed, you can try the next question. Always remember on cost when something is given. When you want to go for on sales, when they give you 1/4 on cost, when you go forward, it will be what? Cost plus profit sales. It will be 1/5 on sales. When they give you 1/28 on cost, 1/28 on cost, it will be what? 1/29 on sales. When you go forward, add cost plus profit, you will get. Suppose if they give you on sales relationship like 3/13 on sales, if they give it, when you come reverse, what do you do? When you come reverse, what will you do? 3/10. Clear? This is selling price, this is profit. Selling price minus profit will give us cost. Coming to the next question. What is the next question? Opening and closing balance of debtors are 17 lakh 10,000 and 19 lakh 40,000 respectively. Opening and closing stocks are this much. Collection from debtors are given this much. Goods are sold to provide a profit of what? 25% on cost. Okay, compute sales and purchases assuming that everything is on what? Credit. Simple, you can prepare creditors account and which account? Debtors. Which account you will start here? Which account you will start here? Debtors account you will start here. Debtors account you can start with. Start. Debtors account. What is opening balance? 17 lakh 10,000. Closing balance, no extra adjustment. What is the closing balance? 19 lakh 40,000. By cash collection, cash account debtor to debtors account, what is the cash collection? How much? 30 lakh 50,000. I'm just recapping the preliminaries. We'll go to the lengthy answer questions after recollection. So sales is the balancing figure. Everything is on credit, so credit sales is the total sales. Credit sales is equal to what? Total sales. We know sales is equal to 32 lakh 80,000 less profit. What is the profit given? How much on cost? So on cost, if it is 25/100, that is 1/4, On sales it will become 1 by 5. So profit is on this 1 by 5. So what is the cost of goods sold? What is the cost of goods sold? 26 lakhs, 24,000, right? Then apply in the cost of goods sold formula, you can get it. Are we given opening stock plus purchases we do not know minus what is the closing stock? 5,10,000. This will give us cost of goods sold. Solve this, you get how much? What is the purchases value? 28 lakh. See, this can be solved by a shortcut approach also. Why do we purchase? Or for what we purchase? Simple, to sell, to keep it in stock. To sell and to keep it in what? Stock. So what is the cost of goods sold? What is the cost of goods sold? 26 lakhs, 24,000, add increase in stock. We increase the stock in the godown, for that we purchase. Compare opening to closing stock. What is increase in stock? 2 lakh, 35,000, add these two, you will get it. 28 lakh, 59,000. This will give us which one? Purchases. Think logically, ignore accounting, think logically. Why are we purchasing? For what we are purchasing? To sell it. Cost of goods sold is 24 lakh, 26 lakhs, 24,000. What is the second reason for purchase? We want to keep the stock in the godown. Compared to opening stock, closing stock increased by how much? 2,35,000, which means additionally we purchased for increasing the stock in the godown. That will give us what? Directly the purchases. Yes, either you can, this way you can work out, or just a logical way. It will reduce the time. In examination, reduction of time matters a lot, and that also should be with a logic, some logic, we should be able to derive it. Clear? So this way also you can do it. Yeah. This you would have done it in the classes. This, if you want, you can add it to your, the permanent memory. Okay. If you have done this, you can go to the next question. We will do the preliminaries, because these are the basic things which are part of a lengthy problem that we will do it. When bills receivable is endorsed to a creditor, what is the treatment and in which account? Wait. When bills are drawn, what is the entry? What is the entry? Bills receivable account debtor, debit what comes in. To which account? Debtors account. Our customers accept our bills. Bills receivable account to debtor to what? Debtors account. Let us assume you are a customer. You have accepted my bill. I pass this entry. To my supplier, I have to pay the money. To my supplier, I have to pay the money. Instead of collecting the bills and paying the money, I can endorse the bill. I can transfer the bill. What is entry for endorsement? What is entry for endorsement? Creditors account debtor to which account? To bills receivable account. Creditors account debtor to bills receivable account. This is what is asked. You can note it. Okay. When bills receivable is what? Endorsed. What is the entry? Because this is most important, because this is where sometimes in the debtors account, creditors account, in a lengthy problem, we make a mistake. So when bills are drawn, bills receivable account debtor to debtors account. When it is endorsed, Creditors account data to which account? Bills receivable account. Wait. Here is where some students also make a mistake. Okay, endorsed bill dishonored. What will happen now? When endorsed bill is dishonored, who will return the bill to whom? Creditors will return the bill back to us. So entry will be like bills receivable account debtor to which account? To creditors account. Then we will return the bill back to our debtors. When they accept the bill, what is entry we pass? Bills receivable account debtor to debtors account. So when we return it back, what is entry we will pass? Debtors account debtor, debit the receiver to credit what goes out. Now, if you look at the net effect, the bill is coming back to us, we debit it here to creditors account, we return it back, debtors account debtor to which account? Bills receivable account. What is the net effect? Here it is debited, it is credited, it is closed. So what we can do? Debtors account debit to which account? To creditors account. So this entry can pass. If endorsed bill is dishonored, only this much sufficient. Here, this is creditors returning the bill to us. The debit what comes in, credit the giver. Debtors account debtor to bills receivable, we return the bill back to them. Here the bills receivable is debited, here it is credited. What is the net effect? Debtors account debtor to which account? Creditors account. This is for endorsed bill dishonored. Next question. When the bills are discounted, what is the entry? When the bills are discounted, what is the entry? Simple. What do you mean by discounting our bills? The money is collectible after 3 months, but I want the money today. So I take it to the banker and ask him to give me the money immediately. So bank will add to your account, bank account debtor. They will charge interest. That interest is called as which one? Discount account debtor. To what are we giving for this? Bills receivable account. So when bills receivable is discounted, this is the entry we pass. Okay. Suppose if the bill is dishonored, if discounted bill is dishonored, pay attention. If discounted bill is dishonored, what will happen? Earlier, who are returning the bill? Creditors are returning the bill. Now, who will return the bill? Bank will return the bill. Okay, debit what comes in? Bills receivable account debtor to which account? Of course, noting charges, if there is any, that will come. But this is a normal entry we pass. Then we will return it to our customers. Okay, debit what comes in? Credit the giver. Bills receivable account debtor to which account? Bank account. It will be returned back to us, and we will be returning back to our customers. Debit the receiver. Debtors account debtor to which account? Bills receivable account. What is the net effect? What is the net effect? Debtors account debtor to which account? Bank account. See, it is easy to remember by comparing. Earlier, what was the entry we were passing? Debtors account debtor to creditors account. Why? The bill was with creditor. The bill was with whom? Creditor. Now the bill is with whom? Bank. So debtors account debtor to bank account. Simple. Okay. If endorsed bill is dishonored, debtors account debtor to creditors account. If discounted bill is dishonored, what do? Debtors account debtor to bank account. Take up this. So when bills are discounted, if discounted bill is dishonored, please make a note for this. Don't think that it is basic or fundamental, because students from across the sections are attending. Some of them would have learned bills receivable concept, some of them would not have learned. So if you have learned already, so don't think that it is boring. Maybe you can just concentrate on the next question kind of a thing. Okay, otherwise if it is learnt, very good. Clear? Bank to BR, when they return BR to bank, we will return back to customers. So instead of passing two entries, we can net it out. Debtors account debtor to which account? Bank account, like that. Next. Rent per month is 15,000. Opening balance outstanding rent is how much? 12,000. Closing balance outstanding is how much? 18,000. What is the rent to be charged in P&L account? The question is, what is the rent to be charged in P&L account? Simple. P&L account is prepared on what basis? P&L account is prepared on what basis? Accrual basis. We do it on what basis? Accrual basis. So what is the rent accrued for the year? 15,000 into 12. 15,000 into 12 will give us 3 lakhs. Okay, 15,000 into 12, sorry, yeah, 1,80,000. 1,80,000. Clear? Okay. Whatever is closing outstanding, it will be shown in which side? Liability side of the closing balance sheet. Whatever was outstanding at the beginning of the year will be shown in what? Opening balance sheet. Please remember, this is rent per month. When rent per month is given, we have to recognize expenses on what basis? Accrual basis. So 15,000 into 12, 1,80,000, you can directly charge it in what? P&L account. See, only when rent paid is given, then what you will do? Rent paid, add outstanding at the end of the year, that is for the current year, minus outstanding at the beginning of the year. All those things you will do only when you do it based on which one? Cash book. When you know monthly rent, 15,000 into 12, 1,80,000 will be charged in which account? P&L account. So simple answer. Sometimes, in the examination we will not think this. We will put 1,80,000, add 18,000 minus 12,000, like that. We may do what? Overlook mistakes. When accrual basis amount is given, charge it in which account? P&L account. Next. Question number 2. Yes. What is the rent paid? What is the rent paid? 1,40,000. Rent paid is 1,40,000. Here what you will do? Add outstanding at the end, 20,000, minus outstanding at the beginning. What is outstanding at the beginning? 14,000. This will be charged in P&L account. This will be charged in P&L account. One lakh 46,000. My handwriting is very bad. That's why I do Excel working. Okay. So, but some problems you have to manage with it. Okay. What is the next one? Simple to work out. Third one. What is the next one? Rent paid. How much is given? 1,50,000. Add outstanding at the end. What is outstanding at the end? 9,000 minus outstanding at the beginning. What is outstanding at the beginning? 12,000. Add prepaid at the beginning. Prepaid at the beginning, 15,000 minus prepaid at the end. Minus prepaid at the end, how much? 11,000. Reason for including the outstanding at the end is it belongs to current year. Prepaid at the beginning, that also belongs to which year? Current year. We include which one? Current year items. That's why we add it. Eliminate outstanding at the beginning because that is belonging to which year? Last year. Prepaid at the end also, that is belonging to next year. So eliminate next year and last year items. Include which one? Current year items. You will get the amount to be charged in P&L account. What is the amount to be charged in P&L account? 1,51,000. See, instead of solving a separate problem for this, I'm just dealing with separate adjustments on that. Then, rent for the year 1,80,000. Opening outstanding, closing outstanding, opening prepaid nil, closing prepaid nil is given to us. Okay. How much you will be charging it in the P&L account? How much you will be charging it in the P&L account? Very good, Abhinaya. I mean, live online. Very good. Think. They have already given rent for the year. So 1,80,000 is the answer. So in the exam you must read it. Is it rent paid for the year or rent for the year? Rent for the year. Even as a student in the exam hall, out of tensions, I have to manage time and other things, then I will do this mistake. Last problem, it was rent paid. So it's a cash outflow. Here it is rent for the year itself is given. So directly you take what? 1,80,000 in which account? P&L account. It is not paid for the year. It is rent for the year, means accrued for the year. Next. Can you recollect? When and all you will adjust purchases. When and all you will adjust purchases. Any doubt in point number 4? Rent, what is given? For the year is given, which means it is accrued for the year. You will charge it in which account? P&L account. Next. Specify the cases where purchases account will be directly reduced. Specify the cases where purchases account will be what? Directly reduced. Okay. So maybe we will go by a journal entry method so that it will be a better one for you. The first one, when the goods are, okay, purchase returns first. Okay, purchase returns will reduce it. Then drawings. When the goods are withdrawn for personal use, what is the entry will pass? Drawings account debtor to which account? To purchases account. Then when? Okay, when it is given a sample for advertisement. When it is given for sample for advertisement, what is the entry will pass? Advertisement expenses account debtor. Expense account debtor to which account? The impact is it will be charged in the P&L account. Advertisement expenses will be charged in what? P&L account. Then loss of stock by fire. Okay, there are two methods of treating. One is it can be adjusted in purchases. Another is you can pass a journal entry. Abnormal loss. Abnormal loss account debtor to trading account. This is an alternative approach. Then trading, it will be charged in P&L account later on. Okay, we'll charge it in P&L account later on after recovering insurance claims. This is an alternative treatment for which one? Abnormal losses. So first they are recognized in which account? Trading account. After charging the insurance claims, it will be debited to which account? Sorry, to abnormal loss account. To abnormal loss account. For example, let's assume goods lost by fire is like 10,000. Recognize it in which account? Trading account. Abnormal loss account after trading account. Out of this abnormal loss, you recovered an insurance claim of 6,000 rupees means what is the net loss? 4,000 rupees will be charged to which account? P&L account, like that. That's the general way of treating which one? Abnormal loss, because there is a recovery called as what? Insurance claim. Probably you can take this also as a note. Recognizing abnormal loss. Then directly it will be reduced from purchases. When it will be directly reduced from sale, of course, we record cash account, debtors, etc. and all. Abnormal losses include theft, loss by fire, pilferages, goods damaged, all those things. For construction of fixed assets. For example, you are dealing in cement, iron and steel, etc. and all, you are a dealer. So whenever you are purchasing those goods, what is the entry you will pass? Purchase account debtor to cash, purchase account debtor to creditors account, like that you will be passing an entry. Those cements or those iron and steel, you are dealing it. Okay, for you it is a stock in trade. Suppose if you take your own good on cement, steel, iron and steel, etc. and all for the construction of your building, then what happens here? That becomes like a capital expenditure. At that case, you will pass purchases account debtor. Purchases account debtor to which account? Sorry, not purchase account debtor, fixed assets account debtor. Fixed assets account debtor to purchases account. So here, whenever the goods are used for construction of fixed assets, it will be capitalized. It will be capitalized. There also, it will be adjusted from what? Purchases. It will be adjusted from purchases. Simply, you are a furniture dealer. Out of the furniture purchased for stock, some furnitures you took it for office use. So that part becomes which expenditure? Capital expenditure. So fixed assets account it out to purchases account, like that you will adjust. I hope it is sufficient. Right? Purchase returns are adjusted, drawings are adjusted, samples given for advertisement are adjusted. Abnormal loss, one method of adjusting is adjust with what? Purchases. Normally that they do it for goods lost in transit. From the supplier place it is coming to you. If those goods are lost, they may adjust it to what? Purchases. After reaching the godown for manufactured goods, etc., if there is an abnormal loss, they record in trading account, then they charge it in P&L account after adjusting which one? Insurance claims. Then specify the difference between normal loss of goods and what? Abnormal loss of goods. Normal loss are unavoidable. Okay. Normal loss are what? Unavoidable. Abnormal loss are what? Avoidable or beyond the allowed limits. Normal loss is predictable, standard, allowable. Abnormal losses are what? Beyond the allowed limits. And most importantly, here you will learn this particular thing in costing, especially like process costing chapters. Let's assume total cost of manufacturing 10,000 units comes to, let's assume 25 lakhs. Normal loss is an unavoidable loss. Normal loss, let us assume 2% is allowed. For this, you will not eliminate any cost. You will not eliminate any cost. Then, let us assume actual loss. Actual loss is like 300 units. So, what is the normal loss allowed? 200. What is actual loss? 300. Abnormal loss you will value. Abnormal loss you will value. Simple. 10,000 minus 200. 10,000 minus 200. For this, if it is 25 lakhs, what is for abnormal loss? 100, like that you will value. Otherwise, you can say the cost of normal loss is borne by good units. Cost of normal loss is borne by good units. And the cost of abnormal loss you will value and you will transfer to which account? P&L account. This you will learn it thoroughly in a chapter called as process costing. You will prepare normal loss account. Nothing will be transferred to P&L account. Okay. Abnormal loss, it will be transferred to which account? P&L account, like that. Because the cost of normal loss is borne by good units. Even at your foundation level, maybe you would have learned chapters like consignment. Okay. Where normal loss, only quantity will be eliminated, no cost will be eliminated. Only what? Abnormal loss is valued and recognized in which account? P&L account. Then, now what I request is, I request you to go through for a glance this bills receivable account. Okay. Then the journal entry, which we have already discussed. Okay. Discounted bill dishonored. Okay. Endorsed bill dishonored. All these most important concepts that I have already discussed in the form of short questions. Just go through for a glance, creditors account, bills payable account, all those things. So hereafter I will talk less, you will work more. Okay, that is better. Just go through for a glance. Probably for about 5 minutes, I request you to go through the bills receivable account, debtors account, okay, things like that. Then we will start with question number 1. Numbers are for your references. This journal entry number 2, when bills receivable is collected, bank account debtor to bills receivable account. Okay, that numbers are given to refer to the particular journal entry. Because in single entry system, if there is a doubt, you pass a journal entry, that's all, it is over. Clear? If there is a transaction, you are not able to understand where to record, just pass a journal entry, then you will be able to post it in a proper ledger and you will get the answer. Read all these things and read this creditors account and bills payable account also. Then we will start with this statement of affairs method or comparison method kind of a thing. We will also discuss elaborately on debtors account, creditors account. Okay, when we go for which one? Conversion method. That is more relevant for which one? Conversion method. Let us start with which one? Comparison method. question number 1. Before we start with it, how to approach a problem? Simple. Prepare statement of affairs at the beginning of the year. Prepare statement of affairs at the end of the year and find out what? Capital. Okay, then you have to go through the adjustments first before you start with them. Some adjustments might be given with respect to end of the year items. Some adjustments might be what? At the beginning of the items, you should be able to identify them. Okay, do it. So I request you to try to prepare and tell me. Okay, probably 2-3 minutes of time I will give it to you. Prepare statement of affairs at the beginning of the year and at what? End of the year. Nothing but a balance sheet at the beginning of the year, then at the end of the year. Work out and tell me the capital balances. Be careful about the paragraph because examination questions sometimes appear easy, but when they make it easy, some hints or some points you have to think and work out like that. It would have been given. Read it and try it. Shall I start or wait? Respond. Start பண்ணலாமா wait பண்ணலாம்? Wait, okay. I'll wait for 1 or 2 minutes. Please try. So many of you have given answer as how much? 44,000, right? Opening statement of affairs. Let us see. This is how we prepare the statement of affairs. What's the remote? So this is how we prepare the statement of affairs. You can do it separately or in a columnar format, anything is fine. Okay. Creditors and loan from Sachin, how much? 32,000, 22,000. Loan from Sachin, opening and closing balance is same, right? Loan from Sachin, 30,000, 30,000 same. Creditors 32,000, 22,000, right? Any doubt in it? Cash and bank balances, what is opening balance? 20,000. Debtors 17,000 and what? 25,000. No adjustment is given regarding debtors. Stock, no adjustment. 40,000, 60,000, no difference. Furniture, they asked you to provide what? 10% depreciation. 10% depreciation. So opening balance is how much? 29,000. What is the closing balance? 29,000 minus 10% how much? 26,100. Okay. So what was the capital balance? Balancing figure? 44,000 you got. So many of you, what you have done is next is interest on loan outstanding. Here many of you would have gone wrong. Look at the wordings used. Look at the wordings used. At the end of 2015-16, at the end of which year? 2015-16, it was found that full year's interest on loan from Mrs. Sachin was not being paid. So, this outstanding interest adjustment is given. Is it pertaining to beginning of the year or end of the year? No. 2015-16 means which financial year? Current financial year or last financial year? Last financial year, they give you outstanding information. This is where, okay, in the exam we must or we might make a mistake. Ajay Karthik, I request you to keep it yourself in mute. Okay, just. Okay. Okay. So once again, I repeat, look at the end of which financial year? Is it current financial year or last financial year? Last financial year, 30,000 into how much percentage? 10% means 3,000 outstanding, which means as on what date? As on what date? 2015-16, end of 2015-16 is nothing but what? Beginning of 2016-17, that is outstanding. Wait, sir, what about for 16-17? Is it specified that it is outstanding for current year? Is it specified that interest from Mrs. Sachin is outstanding for current year? No, which means it would have been paid. It would have been what? Paid. So adjustment, be clear about the date. It is given for which year? Last year. So interest on loan outstanding, it will come in which balance? Opening balance. Closing balance is 0 because they have not mentioned that the interest is not paid for the current year also. Is it given that interest is not paid for the current year? Yes. This is where CA Institute keeps a small hinge. Clear? Normally we are used to, our mind is used like that. Clear? Always interest outstanding is given at the end of the year like that. But look at the words clearly used. Clear? For 2015-16 interest is outstanding. So opening balance it is outstanding. Closing balance it is not given as outstanding. Then pay attention 2-3 minutes. Closing capital is how much? 80,000. 100. Any doubt of the closing capital? 80,000, 100. Then add what? 1617. We are working out profit for 1617. No, 1617. No. This is 1617. This is actually a typing error. This is my error, my mistake. This is for 2017. Okay. So 1617 only we are working out. Closing capital, add drawings, 5,000 per month he has withdrawn, 5,000 into 12 how much? 60,000 less additional capital, personally he contributed 35,000, then capital at the beginning of the year 41,000. If you do this you will get net profit before commission, but look at the commission. What is the commission payable? Shop assistant was to be given a share of 5% on the profits ascertained before charging such share. So what will you do? Will you apply 5 by 100 or 5 by 105? 5 by 105 or 5 by 100? 5 by 100. Commission. Look at. Shop assistant was to be given a share of 5% of profits ascertained before such share is given. So it will be 5 by 100. 5 by 100. See, always whenever that word 5 by 105 like that you would have thought, okay, it is 5 by 100 only. So this will give us net profit after commission. Okay, this is 64,100 into 5 by 100. Pay attention. This always students have a confusion. Sir, when to use 5 by 105? When to use 5 by 105? Wait. Normally we work out gross profit plus income minus expenses. Minus which one? Expenses. We get net profit. We get net profit before commission. In this problem, net profit before commission is like 64,100. Okay, I'll explain the outstanding interest concept. Wait. Live online students, please wait. Okay, gross profit income minus expenses will give us which one? Net profit before commission. In this example, 64,100. Pay attention. If they use the word commission 5% or commission before charging such commission 5%, if those words are used, you can directly take 64,100 into how much percentage? 5%. Suppose if they use the word commission 5% after charging such commission, we will take 64,100 into 5 by 105. Sir, why this 5 by 105? Simple, pay attention. This 5% is given after charging such commission. This 5% is given after charging such commission. Wait. If you are running a net profit of 100, if you are running a net profit of 100, this is your final net profit. Okay. If commission is 5, what would have been the net profit before commission? The percentage given is commission 5% after charging such commission. Suppose if it is used, okay, Your net profit, if it is 100, that is after charging all the commission, if it is 100, commission is how much? 5 rupees. What would have been the net profit before charging that commission? 105. Otherwise, you earn 105, you pay commission 5, the final net profit becomes what? 100. That's why we apply here 5 by 105. I repeat once again, pay attention. In this problem, commission is given before charging or after charging? Before charging. So 64,100 is a profit before charging commission or after charging commission? Before charging commission. So 64,100 into how much percentage? 5% finished. Clear? So that is 3205. Suppose in the exam problem, if they tell you commission 5% after charging such commission, then only we will apply 5 by 105. Sir, why by 105? Simple. If net profit after commission is 100, your commission is how much? Commission is how much? 5. Then what would have been the net profit before charging such commission? After charging commission, if it is 100, commission போனதுக்கு அப்புறம் 100 rupees now. Before charging commission, how much it would have been? 105. This is what is given to us. If this 105 is like 64,100, what is 5? That's why we apply what? 5 by 105. So wherever they use the word after charging such commission, wherever they use the word after charging such commission, then you apply which one? 5 by 105. Otherwise, normal how much percentage? Commission, they tell you 5%, apply 5%. Before charging such commission also apply what? 5%. Only when they use the word after charging such commission, then you apply what? 5 by 105. Now I repeat, for this interest outstanding, yeah, for those who are not understanding, please listen. Look at the adjustment, look at the adjustment. At the end of 2015-16, it was found that full year interest on loan from Mrs. Sachin was outstanding. 15-16 is which year? Last year. 15-16 is which year? Last year. So 30,000 into how much percentage? 10%. 30,000 into 10%. Interest was outstanding at which year? Beginning of the year. Because this 2016 balance is from what? 15-16 financial year. Sir, why are you not including here? Why are you not including here? Because it is not mentioned that it is outstanding for the current year. Is it mentioned that the same amount is outstanding for current year also? No. So it is not outstanding for current year. Okay, it belongs to which year? Last year. That's why it is included in what? Opening liability. Okay, they would have paid in the current year. They would have paid in the current year. So be careful in reading the problem. Take up this. If you have completed this, you can go to next question. Question number, that AB in partnership like that. By just looking at the question, you will feel that partnership accounts is not there in our syllabus. Why should they ask? But actually they are maintaining under which method? Single entry method. A partnership firm maintaining under what? A single entry system. Read the problem fully, then we will solve it. Are you trying this question number? Second question. AB are in partnership, sharing profits and losses in which ratio? 2/3, 1/3. 2/3, 1/3 proportion. The books are kept on single entry system. The statement of affairs at the 31st March 2001 is given to us. We are given capitals. Yeah, break is given already. 10-15 minutes. Small break. Okay. Okay, so capitals of A and B is given. Creditors, loans, bills payable, freehold building, plant and machinery, office furniture is given to us. Stock, debtors, bills receivable, cash balance is given to us. On 31st March 2002, the position is given, like current assets and current liability position they have given. Debtors, creditors on open account means creditors for goods. Creditors for loan account means loan. Cash is given. Stock valued at how much? 4,200. Bills receivable 1,400. Bills payable nil. Next point. Drawings are given to us. Drawings are given to us. A withdrew profit 1500, B withdrew profit 600. A has withdrawn 2000 on account of capital on what? 30th September 2001. This one, partners agree to reduce the previous valuation of plant and machinery means depreciation. Then office furniture depreciation. Okay, then they are charging what? 5% per annum. 5% per annum. Please make a note, it is not 5%, just 5% per annum. Interest 5% per annum. So before we start with which one? Statement of profit, we have to prepare what? Statement of affairs on 31st March 2002. Start with statement of affairs on 31st March 2002. Let us prepare the statement of affairs. Let us do it in the same order so that we won't miss anything. Building minus 5%. Tell me the amount. Building minus 5%. How much? 5,700. Then let us prepare in the same order. Building minus 5%. Then plant and machinery minus 10%, right? That also 5%. 1,900. Then plant and machinery by 5%, furniture by what? 10%. Okay, building they have not given anything. So building how much? 6,000. Then furniture minus 10%. Then take the closing balance of stock, debtors, bank balance. What is the stock balance, closing balance? 4,200. Debtors 8,000. Bills receivable 1,400. Cash balance how much? 800. Liabilities. Creditors or on open account is nothing but creditors, general creditors. What is the creditors balance? 8,000. No, 8,500. 8,500. Creditors or loan account, nothing but loans. 1,600. Then any outstanding expenses, etc. Capital of A and B combined with the balancing figure. 22,750 minus 1,600 minus 8,500, right? 12,650. This is your capital of both the partners put together. But don't split this in 2:1 ratio and all. Only profit sharing ratio is in which ratio? 2:1 ratio, but not the capital. Combined capital of A and B, 12,650. In this also, the CA Institute has not given any trouble. The trouble comes the next one. Let us see. Start. Statement of which one? Profit. Try to prepare the statement of profit. and tell me the answer. Those who are in live online can just send me the answer in chat. What is the profit or loss? Okay, of course, physical class, you can tell it to me. $2,700. Wait, let me to check. Drawings away. How much of profit he has withdrawn? $1,500. How much A withdrawn from capital? Capital withdrawn 2,000. B, he has withdrawn profit only. Then less any additional capital? Any additional capital? No. Less opening capital of A and B combined 14,000. Not over. Less interest on capital. Interest on capital at the rate of how much percentage per annum? 5% per annum, not 5%, 5% per annum. You work out, you will get net profit. What is the answer? Hope you have taken up statement of affairs. $2,000 net profit for the year. Let us see. What is A's interest on capital? 450. Wait, what was A's opening capital? 10,000 into how much percentage? 5%. Many of you would have taken 10,000 into 5%. You would have just taken 5%, 10,000 into 5%, 500 like that. No, it is not so. But A's capital is throughout the year same. No, A has withdrawn his capital. A has withdrawn his capital. Look at the capital balance of A in the balance sheet given to you. What is the capital balance of A? 10,000 was there, but this is not there for the year. This is not there for the year. Look at, on 30th September, from the capital he has taken back 2,000. On 30th September he has taken back from capital how much? 2,000, which means this 10,000 rupees, 10,000 into 5% would have been there only for what? 6 months. For the remaining 6 months, it is 8,000 into 5% into 6 by 12. Okay. A's capital balance 10,000 into 5% into 6 by 12 for the first 6 months. For the next 6 months, it is 8,000 into 5% into 6 by 12. Interest is only 450. Clear? 10,000 was there in your capital balance at the beginning of the year. You have taken back 2,000 rupees. Okay. For the last 6 months, what is your balance? It is only 8,000 into 10% for the next 6 months. B. What is B's capital? 4,000 into how much percentage? 5%. How much? So totally how much you will eliminate? 650. Sometimes when you ignore the dates, there is a chance of error in profit. Here you be very careful. A's capital balance. A's capital balance for the first 6 months it is 10,000. For the next 6 months it is only 8,000. This net profit will be shared between A and B in which ratio? 2:1 ratio. 2:1 ratio, how much it will be? 1,400 is to 700. We can verify the answer also. Sometimes in the examination, they may ask you, this is a combined capital of A and B. What is the combined capital of A and B? 12,650 is the combined capital of what? A and B. They will ask you to show the capital separately for A and B. Capital separately for what? A and B they may ask you to show. At the time you have to do a reconciliation. Capital, okay, we can have 2 columns like particulars and 2 columns. Capital at the beginning. Capital at the beginning. What is the capital at the beginning of A? 10,000. B, 4,000. Add. Net profit share. What is the net profit share? 1,400 and 700. Add. Interest on capital. Interest on capital. What is interest on capital? 450 and what? 200. Then less drawings. Drawings. A totally capital and profit, how much he has withdrawn? Totally profit and capital 3,500 he has withdrawn. B, how much he has withdrawn? 600. Then this will give us capital at the end of the year. You can check these two. You will get the balance. This is the capital at the end of the year. This is a normal final accounts method. When you prepare a normal final accounts, what do? Opening capital, add net profit, add interest on capital minus drawings. We will get what? Capital at the end of the year. And this is what we got also. By preparing a statement of affairs, we have taken assets minus liabilities. We got how much? 12,650. That is nothing but this 12,650. Take up this. Sometimes as an extension they may ask, find the separate capital of A and B. At the time you may have to prepare what? A statement. So this is a partnership for maintaining under which method? Single entry method. Apart from this, okay, you can practice from your ICAI and maybe today after the sessions if you have energy, probably like 1 or 2 hours you can spend time in going through the problems based on single entry from your RTP, PTP or ICAI material. Okay, some 2 or 3 beautiful problems are there. You can solve them. From which method? This is which method? Statement of affairs method. Shall we? Shall we proceed or wait? Shall we proceed? Good. See, conversion method, simple. We are going to convert the single entry into a double entry. This is possible when the other person is able to provide more information. With very limited information, we can do only which method? Statement of affairs method. When the person who is not maintaining proper books of records is able to give you cash book, debtors ledger, creditors ledger, when they give you more detailed information, then it is possible to go for which method? Conversion method. For the purpose of solving examination problems, okay, the compulsory accounts that you have to prepare is debtors account and which account? Bills receivable account. This must be done together. Then which account? Creditors account and which account? Bills payable account. Creditors account and what? Bills payable account. Then you have to prepare which one? Cash book. Sometimes combined, sometimes you will prepare which one? Cash and which column? Bank column. Cash and bank account column you will maintain. Okay, then you have to prepare what? Statement of affairs at the beginning. Okay, so sometimes students start with statement of affairs at the beginning as a first step. The examination, opening balance of data sometimes will be given as a missing amount, or opening cash balance may be a missing amount. So without finding out all the opening balances, it's not possible to prepare what? Statement of affairs at the beginning. So don't start always with which one? Statement of affairs at the beginning. Try to find out debtors, creditors, cash book. Sir, in this which account I have to start with first? Sometimes they will give you debtors opening balance as a question mark. Debtors opening balance as a question mark. Credit sales also will not be available. When you prepare debtors account, to balance brought down you will put, to credit sales you will put. Both are not available means how to find out? Okay, that kind of problems are repeatedly tested in the exam. Okay, you will be given debtors question mark, opening balance. When opening balance is a question mark, can you prepare opening statement of affairs? No. Can you prepare debtors account? No, because what is missing? Opening balance is missing as well as credit sales is also missing. Then, in that circumstance, you will start with which account? Creditors account and which account? Bills payable account, find the purchases. Find which one? Purchases. Then definitely they would have given you some gross profit margin. Using that cost of goods sold, sales and all you have to work out. Sales and all you have to work out. From the total sales, identify which sales? Cash sales and credit sales. Either ratio will be given or as a balancing figure in the cash account you will find out. Okay, some information will be missing that you have to make out through which account? Creditors account, cash account, like that. Once you identify credit sales, then you can prepare which account? Debtors account and which account? Bills receivable account. At the end, you come to statement of affairs at the beginning. Please remember, all these are which one? Working notes. All these are considered as working notes. Then our main answer is which one? Trading, profit and loss account. Then which one? Balance sheet. Trading P&L account, and which one is? Balance sheet is the next one. So where to start purely depends on the problem. Okay, where to start purely depends on what? The problem. Sometimes you will start with cash book, find out cash sales, then come to creditors account and find out what? Purchases, then work out sales, purchases, cash purchases, credit purchases, like that. Prepare which account? Debtors account, then statement of affairs you can prepare. Some problem, they will give you all the opening data. Then you can start with which one? Statement of affairs at the beginning. Then normally you can do debtors account, creditors account, cash account, all those things you can prepare. So it purely depends which ledger account first, depends on what? The question. Okay. So this is conversion method. But compulsorily or definitely you will prepare these things before you start with which one? Trading P&L account and balance sheet. Sometimes problems are formed with ratios alone. Okay, like stock current ratio, quick ratio, like that. They give you ratio analysis. Based on that, they ask you to construct which one? Trading P&L account also. That also we can do. Now let us start with a normal problem, then let us go with an advanced problem. This was also a past asked question. Go to that. Question number 3. Read the question number 3. Let us identify where to start, then let us continue. But ensure that wherever you prepare debtors account, along with that you have to prepare which account also? Bills receivable account. It must be opened together. Creditors account and which account? Bills payable account. Then cash and bank account. Depending upon the problem you can work out. Then opening statement of affairs. Go through question number 3. Mr. X could not keep complete records. He furnishes you the following information. Particulars of assets and liabilities are given to you at the beginning of the year and what? End of the year. I hope we are given all the assets and liabilities details. In this problem we can do opening statement of affairs also, no problem. Then we are given bank transactions like collection from debtors, payment to creditors, bills receivable collected, bills payable discharged, cash sales deposited, cash purchases by check, additional capital, wages paid, commission received, salaries paid, rent, insurance. Okay, all these are bank transactions available to us. Then look at the additional information. A provision of how much? 10% is required for doubtful debts on the closing balance or on the opening balance. If nothing is specified, it should be on what? Closing balance. Depreciation 5% on furniture and fixtures. Buildings how much? Okay, no. Read it further. Here also there is a sentence framing. A provision of how much? 10% is required for doubtful debts. Then depreciation 5% written on furniture and fixtures and what? Buildings. Then actually the comma is in the wrong place. Rupees 6,000 is outstanding for wages. There is outstanding wages. 2,400 is salaries. Prepaid insurance are given. All these are closing balances. Outstanding legal expenses. Discount allowed. Discount earned. Then returns inwards, returns outwards are given. Then bad debts are given to us. You are required to prepare a trading P&L account and which one? Balance sheet. I hope in this problem we can start in a normal way. No gross profit margin, nothing is specified. We can start in the normal order. Where we can start with? Opening statement of affairs we can prepare. Then we can start with which one? Debtors account, creditors account, like that you can continue. Start. First prepare the opening statement of affairs. Maximum 2 minutes of time for that. 2 minutes or 3 minutes you can take. Will be the balances. What are the assets? Stock. What is the stock value? 37,400. Then debtors. How much? 24,000. Debtors 24,000. Then bills receivable 8,000. Then furniture how much? Then building 24,000. Then bank balance 8,700. Then creditors. Then bills payable. Anything else? Simple to work out. $83,300 is your capital. Debtors account. To balance brought down. To balance brought down. What is opening balance? 24,000. Credit sales is missing. Credit sales is missing. By cash collection. What is the cash received from debtors? 74,800. Then what else will come? Bad debts. That is given in the last adjustment. How much of bad debts? 1,000. Then by sales returns 1,000. Then don't close the account because we have to prepare which account? Bills receivable account and check. To balance brought down. What is the opening balance of bills? 8,000. Cash received for bills or realized for bills. Bills receivable collected by cash or bank. How much? 24,000 by cash or bank. Then by balance carried down. What is the closing balance given for bills receivable? 10,000. Tally this, you will get, this is a bills receivable accepted by our customers. Bills receivable to which account? Debtors account, nothing but bills drawn during the year. What is the bills drawn during the year balancing figure? This will come as which one? By bills receivable account. 26,000 as a balancing for you get credit sales. Anything that we omitted or missed? Cash collection, bad debts, any discount allowed given in the problem? Yes. Anything else that we omitted? The same way you prepare which account next? Creditors account and which account? Bills payable account. Prepare the creditors account, then bills payable account. I'll explain debtors account. Okay. All these are nothing but posted from your problem, right? Opening balance is available. Credit sales, we'll find it as a balancing figure, okay? Cash collection, cash account data to debtors account, by bad debts, by sales returns, by discount allowed. Yes, closing balance we have not. What is the closing balance? 28,000. Closing balance 28,000. Then we recorded all these things. Opening balance is given, okay? Then bills receivable account, to balance brought on 8,000. As a balancing for, you will get debtors account. Nothing but bills receivable accepted during the year or drawn during the year. What is the balance? 24,000 plus 10,000 minus 8,000. This will come as by bills receivable account. $26,000. Tally this, you will get the credit sales. Yeah, closing balance we have not written. 1,07,800. Okay, this is correct. Next, prepare creditors account and bills payable account together. So first always close the subledger. Which account? Bills receivable account. As a balancing for, we get which one? Bills drawn during the year. Okay, that you get it. Opening balance plus this, all these collections, etc. You get credit sales as which one? Balancing for. Try next, creditors account and bills payable account together. Let us prepare the creditors account and bills payable account. By balance brought down. What is opening balance? 18,000. 2. Cash or bank. What is paid for bills? Bills payable paid. Bills payable by balance brought down. What is opening balance? 2,000. Then bills payable paid discharged during the year. 18,600. Then to balance carry down. How much? 400. This will give us by creditors account. Nothing but bills payable accepted during the year. Okay, what is the balance? Journal entry is like creditors account data out to bills payable account. Creditors account data out to which account? Bills payable account. That is bills accepted during the year. Then what is the opening balance in creditors? 24,000. Then closing balance? Closing balance? Then any discount received? 1,000. Purchase returns? 1,000. Amount paid to creditors? Then as a balancing before we get this, or anything else is missing. So this is your creditors account, and which account? Bills payable account. I got closing cash balance is missing in the problem, right? Closing cash balance is a question mark. Next, having prepared debtors account, creditors account, bills payable account, all these things. Okay, this is a normal problem, a forward working problem, where we are starting with which one? Statement of affairs, then creditors, bills payable, debtors, bills receivable, like that. Next we can go to which account? Cash or bank account, combined. Okay, bank account. We can just prepare bank account. We are not given cash details. Let us prepare the bank account. Closing balance will be the balancing figure. Try to prepare the bank account next. Bank account, what is opening balance? To balance brought down 8,700, that is given to us. To credit sales, what is the credit sales? We worked out credit sales. Oh, sorry, cash collection from debtors. 74,800. Then okay, credit cash sales, let us put it here. Any cash sales? Then by payment to creditors, 52. Bills receivable collected 24,000. Then bills payable paid 18,600. Then various other expenses, purchases, then wages paid, then commission received, salaries, how much? Then rent and taxes 7,800. Then insurance 1,600. Then that's all. Returns inwards, returns outwards, that is not a cash transaction. Purchase returns and sales returns, that will come of course in the creditors account and in the trading account. Anything else? Yes. Any drawings? Carriage inwards. Expense. Carriage inwards is an expense. Carriage inwards accounted out to cash. Process journal entry, you will understand. Carriage inwards accounted out to cash or bank. How much? 500. Only purchase returns, sales returns will not come. Then Advertisement 660. Then drawings how much? Anything else? Tally this. Your credit side total is more than the debit side, right? So this will be a closing balance. Normally it should be buy balance carried down. When it is coming in the other side, it is overdrawn. How much? 1660. Balancing figure. Take up this, we will proceed. Now once we have done this, what is the next one we can do? Start with which account? Trading, profit and loss account we can start with. Check whether we have omitted anything. Opening balance, debtors collected, cash sales, bills receivable collected, commission received, additional capital, then various payments, creditors, bills payable paid, purchases, that is in cash, wages paid, salaries paid, rent and taxes, insurance paid, carriage inwards is an expense, carriage inwards accounted to bank, advertisement, then what? Drawings. Normally we should get two balance brought down, opening balance, we should get what? Buy balance carry down. We can also check. Payment side is more than which side? Receipt side means there is an overdraft. There is an overdraft. Closing balance will come in which side? Liability side. Please take it up. Then start with trading P&L account. You are going to prepare the trading account, then gross profit you tell me, then continue with which account? P&L account. Let us prepare the trading P&L account for the ending 31st March 2002. Cash sales plus credit sales minus what? Returns. What is the net sales? Cash sales plus credit sales minus sales returns. Cash sales plus credit sales minus what? Returns. How much you get? What is the cash sales? Credit sales is 1,07,800. Cash sales is how much? 17,200 minus returns 1,000 rupees. What is the amount? 1,22,000. Then closing stock given in the problem. What is the closing stock? 46,800. Closing stock 46,800. What is the opening stock? 37,400. 37,400. Purchases, same way, cash purchases plus credit purchases minus returns. How much? 56,200. Then wages plus outstanding wages. Total wages, add outstanding wages also. How much is outstanding per wages? Yeah, add 6,000. Wages plus outstanding wages. What is the total? 30,000. Then to carriage inwards. What is the carriage inwards? Carriage inwards. Anything else that we missed out? By gross profit 46,700. Discount received. What is the discount received? Discount received. How much? 1,000. Charge all the other expenses. Discount allowed 1,000. Commission received how much? Then salary. See, there was a question asked, sir, already we recorded purchases returns in the account. Remember, accounting has two things. One is bookkeeping, another one is what? Accounting. Okay. In debtors account, what is recorded? In debtors account, what is recorded? Many students, even in the regular class, they ask the same doubt. Let me to clarify that. See, debtors account data to sales. Debtors account data to sales. This is sales returns account data to which account? Debtors account. Now, my question is, this 1,07,800, is it a gross sales or net sales? 1,07,800, is it a gross sales or net sales? Gross sales. Okay. Here you see cash collection, bad debt, sales returns, bills drawn, discount allowed, closing balance. It is not adjusted. We added all these things and eliminated opening balance. Whatever you get, this 1,07,800 is which one? Gross sales. Otherwise, journal entry is like debtors upon debtor to sales. This is a gross amount. Then sales returns are recorded. Sales returns are recorded separately. Sales returns upon debtor to which account? Debtors account. Sir, I already recorded in debtors account. Why should I adjust it again? See, both sales as well as what? Sales returns are recorded in debtors account. That is bookkeeping. While doing accounting, I just check. Okay, what is my cash sales? What is my credit sales? And what is my sales returns? 1,24,000. Opening stock, purchases also. What is my cash purchases, credit purchases minus what? Returns, I take it. Wages plus outstanding wages, carriage inwards, gives me the gross profit. What is the gross profit? 46,700. Then, tell me the other expenses in the P&L account. What are the other expenses? First, salary is how much? 13,000 with outstanding plus outstanding amount 15,400. Outstanding amount given adjustment. Then what is rent? Rent how much? Any outstanding amount given? No, 7,800. Then to insurance. Any prepaid item given? Insurance minus prepaid net amount 1,200. Fast. Then what is it? Advertisement. Advertisement how much? 660. Then to bad debts. How much? Then to provision for bad debts at the rate of how much percentage? 10% on the closing debtors balance. What is the closing debtors balance? Debtors balance 28,000 into 10%, 2,800. Then any depreciation given? Depreciation how much? 5% on both furniture as well as what? Building. Depreciation on furniture 5%, how much? 60. Buildings, also 5%. How much? 1200. Then, anything else? Most important, the last adjustment. Legal charges. Legal charges, you check here. Outstanding legal charges, how much? 1400. Sir, in bank account, there is no payment called as legal charges, but there is an outstanding amount given, which means legal charges are fully outstanding. This is outstanding. Nothing is paid, fully outstanding. How much it is? 1400. Tally this, you will get which one? Net profit. No, already journal entry has been passed. You look at data's account. This closing balance is arrived. After recording bad debts, sales returns, discount, all these things. So this closing balance is after what? Bad debts. Already we passed a journal entry, bad debts account data to data's account. So the 28,000 is a net balance after bad debts. So net profit is 18,180. Now you can continue with which one? Balance sheet. Debtors account and creditors account, whatever you get is not a net purchase. There is a gross purchase and gross sales. That's why we record cash plus credit minus returns. Prepare the balance sheet, try it on your own. Already bad debts account, if it is recorded in debtors account, again you need not adjust. Now, when you balance sheet போடும்போது bad debts, debtors account this much minus provision for bad debts. Suppose specific like this debtors balance is before adjusting the bad debts. On the case matter adjust பண்ணலாம். Any doubt in it? Discount allowed, salary plus outstanding salary, rent insurance minus prepaid insurance, advertisement bad debts, provision for bad debts 10% on 28,000. Liability side will come. OD, bank balance, OD, liability side it will come. Legal charges outstanding, fully outstanding, nothing is paid, fully outstanding, this will come in the liability side also. Net profit 18,180. Start with balance sheet on 31st March 2002. What is the opening capital? 83,300. Add net profit 18,180. Additional capital 5,000. Drawings 15. Creditors 3,000. Many outstanding expenses are given. What are the outstanding expenses? Wages 6,000, salaries, legal expenses fully outstanding 1,000, 200, 400. The prepaid insurance will come in the asset side. What is the prepaid insurance? All outstanding expenses will come here. Then debtors, what is the debtors balance? 28,000 less provision for bad debts. How much? 2,800. I have to column 25,200. Then bank OD also will come in the liability side. What is the bank OD? 1660. Closing balance is an odd run balance. Then furniture minus 10%, right? Then building minus 10% depreciation. 24,000 minus 10% or 5%, 22,800. Then what is the next one? Closing stock 46. Bills receivable. What is the bills receivable balance? Then why this is not tallying? Bills receivable we recorded. Bills payable. Much? Good. If you omit one item like this, no problem. 2 or 3, it will cause a trouble. Building minus 10%. 24,000 minus 5%, sorry, 1,200. This is 5% depreciation only. Next problem is one of the beautiful constructed or construction problem. Okay, where we have to make assumption and based on that we have to write the answer. We'll do it. Thereafter we'll go for lunch break or whatever. Next problem we will solve it. Then we'll go for the lunch break. Read the next question. Following is the balance sheet of retail business of Mr. Raja on 31st December 2001. We are given capital, very good, but whenever they give you something, okay, opening statement of affairs is given, happy, but something else will be missing. Okay, so when the problem appears easy, some difficulty may be there. Okay, there are 2 or 3 places. This was a past exam question. In 2 or 3 places, students have gone wrong. You have done this already in the class? Some of you might have done this in the class already. No issues. We'll do it. Okay. Look at Raja selling the goods on what? 25% profit on sales. So wherever they give you some profit margin, definitely sales will be missing. Either cash sales or credit sales or both might be what? Missing. Which means we have to prepare or find out the sales based on what? Find out the sales based on either debtors account or based on cost of goods sold. Something will be missing. Okay. Then goods are sold for cash as well as credit. Credit customers are paying by what? Check only. Payment for purchases are always made by check. Very good. It is the practice of Mr. Raja to send to the bank every weekend collection, taking of the week after paying weekly salaries 250 to the clerk, sundry expenses 50, petrol expense, personal expenses what? 100, which means salary is a business expense, sundry expense also business expense. All these are spent monthly or weekly? Weekly. Then what about this personal expenses? Drawings. There is like a weekly drawings he has made. Then analysis of the bank passbook is given to us. Payment to creditors is done by check. Payment of rent is also done by check. Amount remitted into the bank. What do you mean by remittance? Cash deposited. Cash deposited 1,35,000. What is the journal entry for depositing cash? Bank account data to cash. But look at the sentence in between. This includes 1,000 of check received from a customer. So you tell me what is bank account data to cash now? Bank account data to cash, will you put 1,35,000? No, then this 1,35,000, this includes what? 1,000 rupees of check from customer. So only 1,25,000 is cash deposited in bank. Bank account data to cash only 1,25,000. Sir, what about the remaining 10,000? That is bank account data to debtors account. Bank account data to debtors account. Okay. Here many students have taken 1,35,000 directly as which one? Cash deposited. Then again they adjusted this in customer's account. So finally your balance sheet will not tally by 1,000 rupees. Okay. Then or your sales will be more by some 10,000 or something like that. Closing stocks are given. Closing stock, closing creditors, closing debtors are given. Look at the next one. On the evening of 31st March 2002, the cashier absconded with available cash in the cash box. Prepare a statement showing cash defalcated by what? Cashier. Very simple. Prepare bank account separately, cash account separately. Cash account, do we know opening balance? Yes, what is opening balance? Cash in hand. 1,000 rupees cash in hand available. Okay. Record all the receipts minus payments. Okay. Whatever comes in, you will debit. Whatever goes out, you will credit. Normally, the balancing for we will take it as by balance carried down. Cash balance to balance brought down. All the collections on the debit side, all the payments on which side? Credit side. Normally, we will take the closing balance as which one? By balance carried down. In this problem, the cashier has absconded with the available cash. So we will take it as what? By cash missing or by cash taken or by the cashier or whatever. Now the question is, wait, the question is not that one. We prepared a cash account, opening balance, let us assume some amount, receipts minus payment. We got some, that cash missing 25,000 rupees. What is the cash missing? 25,000 rupees. Cashier has absconded. Will you take this as a loss in P&L account or show it as an asset as recoverable from the cashier? Let's assume I am the cashier. On 31st March, I absconded with available cash. The cash escape are missing is 25,000 rupees. Will you take it as recoverable from me in the asset side or can you take it as a loss? There are two chances of answers. One is you have to give the assumption on a prudent basis, provide for all losses, provide for all losses. This 25,000 cash missing is taken as a loss. Therefore, I charge it in which account? P&L account. Like that, you have to write the note. Other way. It is just said that cashier has absconded with the available cash box. Have you filed a police case? Whether any legal action has been taken? Is it given that cashier is totally missing? You cannot recover cash. You can go for an alternative assumption also. What is the assumption you can write? Okay, since further evidences are not available about police FIR filed or non-traceability of the cashier, etc., I take it as which one? Cash recoverable from the cashier. I will show it in which side? Asset side. But anyway, you must write your assumption. Both the answers are taken as correct answers only. Then you write your assumptions and do the thing. So for uniformity in answer in class, as you have said, I will take this which one? Cash lost. Then I will write a note on a prudent basis. The cash is lost. Lost is what? Provided in the books of accounts. Simple. The balancing for in cash, we take it as what? Cash lost. And we take it as what? Loss in which account? P&L account. Number one. Before we work out the cash balance, what are the things to be worked out? Are we given complete details? See, do we know cash sales? Look at, do we know cash sales in this problem? To prepare the cash account, what and all we require? Two balance brought down, two cash sales plus other collections and other payments we require. Look at the point number B. Goods are sold on cash as well as on what? Credit. Credit customers are paying by check only. You can prepare debtors account and find out credit sales. But what is the cash sales? You cannot prepare cash account and find out two balancing figures. Two balancing figures you cannot work out. Closing balance also you have to work out. Cash sales also we have to work out. Is it possible? Not possible. So what to do? So first prepare debtors account. You can find which sales? Credit sales. Second, you prepare which account? Creditors account. Creditors account, you will find out which one? Purchases. Then once you find the purchases, we can work out cost of goods sold. Opening stock, purchases, closing stock will give us cost of goods sold. We are given profit margin. What is the profit margin given? 25% on sales. Using that, we can find out total sales. Okay, from the total sales, when you eliminate credit sales, you will get which one? Cash sales. Then only we can prepare cash book. Then only we can prepare which one? Cash book. So start with which account first? Start with debtors account. Then go to which account? Creditors account. Try to find out credit sales and credit purchases. Let us see. Start. You are going to do, take about 4-5 minutes of time. No problem. Try to solve it. So first prepare debtors account, get the credit sales. Then prepare the creditors account, get the credit purchases. Then we will see cost of goods sold and other things. One more mistake which normally a student will do, we will come to that later. Let me start with debtors account. Two balance brought down. What is the opening balance? How much? 20,000. To credit sales, we have to get it as a balancing figure. By bank, that is check collected from the customer. 10,000. By balance carry down. I hope given in the last 3 lines. It's given at the end. This one. 30,000. As a balancing for, we'll get which one? Credit sales. What is the credit sales? $20,000. Credit sales is 20,000. But we do not know the cash sales. We cannot start with the cash book directly because we do not know the credit sales. Creditors account, let us prepare. By balance brought down. What is opening balance? 30,000. Then by purchases, balancing for we have to work out. Then to cash our bank account, how much is paid to the creditors by check? 75,000. Then any purchase returns, discount allowed, discount received, all those things? No. To balance carry down. How much? 32,500. As a balancing figure, what is the amount you get? $77,500 is the balancing figure, that is your purchases. Look at the words used in the problem. Look at, goods are sold for cash as well as what? Credit. What is the meaning? There is a credit sales as well as what? Cash sales. Credit customers are paying by check only, which means debtors are collected through check only. Then payment for purchases are always made by check. What is the meaning? Here already we have seen this amount is paid by check. Is there a chance of further purchases? No. So which means this purchases is the credit purchase, that is a total purchase. That is a total purchase. Now we can work out cost of goods sold. Start. Cost of goods sold. Cost of goods sold, opening stock plus purchases minus closing stock. Opening stock, how much opening stock given? Plus purchases minus closing stock, last three lines. How much? 32,500. What is your cost of goods sold? 1 lakh? This is your cost of goods sold. What is the profit on sales given? 25 by 100. That is 1 by 4 on sales. So 1 by 4 on sales will be equal to 1/3 on cost. So cost of goods sold 1,20,000. This into 1 by 3. How much? 40,000. What is the total sales? This is your total sales. This is your total sales. In the total sales, eliminate which one? Credit sales. What is the credit sales? 20,000 is credit sales. Means what is the cash sales? 1,40,000. This is what is going to come in cash account. 1,40,000 is going to come in which account? Cash account. Next, try to prepare the cash account. Cash account should be prepared separate and bank account should be prepared separate. Now, it is proven, yeah, goods are sold for cash as well as for what? Credit. Next, prepare cash account. Read the problem, and it's a very good problem in cash account. To balance brought down. I'll write it. What is opening balance? 1,000. To credit sales, to cash sales. What is the cash sales we worked out? 1,40,000 we worked out. Then that will come in bank account as well as cash account. By bank account. This is a contra entry. This will come in bank account as to cash. How much will it take? 1,25,000. Any other cash collection? Then record all the payments. What are the payments made? Creditors are made by check only. That will not come in cash account. It is a practice of Raja to send every weekend the takings. How much? Salary 250, sundry expenses 50. All these things are paid in what? Cash. Read the question. It is a practice of Raja to send to the bank every weekend taking, means every weekend collections after paying weekly salaries. What is the meaning? Okay, he is selling the goods for cash. He is sending the cash to the bank after paying which one? Salaries, sundry expenses and the drawings. That is in cash. It is like this. I sell the goods for cash. Do I deposit as it is in the bank? No. After paying which one? Salaries, sundry expenses and what? Personal expenses given. Which means those expenses are incurred in what? Cash. So by salary, by sundry expenses by drawings. Now tell me the salary. What is the weekly salary? What is the weekly salary? No, weekly salary. 250 into. Wonderful. Wonderful. Wait. Look at the balance sheet is given on what date? 31st December 2001. They are asking you to prepare final accounts on what date? 31st March 2002. So are you going to prepare accounts for 1 year? Sir, balance sheet is given just 31st December. We are asked to prepare the accounts on what date? 31st March 2002. So we are not preparing accounts for 12 months. We are preparing only for how many months? 3 months. So not 52 weeks. Not 52 weeks. So 250 into. So how many weeks? 12 weeks. Wait, again wonderful. Okay. You are assuming what? 4 weeks a month, which means 12 months only. How many weeks will be there in a year? 12 into 4, how much it will be? 48. But how many weeks are there actually in a year? 52 weeks. You work out proportionately for 3 months. Pay attention. How many weeks are there in a year? 52 weeks. Okay, we are working for how many months? Okay, 52 weeks is for 12 months means what is for 3 months? Yes. So 52 into 3 by 12. 52 into 3 by 12. How many weeks? 13 weeks. So here many students went wrong. Some students took 52 weeks. If you work out based on 52 weeks, you will have surplus in cash. Then they thought problem is wrong. Okay, let us work with some students understood it's a 3 months problem, but assume that it is 3 weeks, 4 weeks a month. 3 into 4, 12 weeks like that they have taken. No, it is actually how many weeks? 13 weeks. So 250 into 13 weeks, how much it is? Everything would have been correct. But here is where, without reading the problem properly or understanding it properly, they would have gone wrong. How much? 3,000. Good. Then sundry expenses also, how much? So 3,250. So like me also sometimes while typing or while entering there may be mistakes. So either the teacher should be good or the student. Okay, leave it. Coming back, what is the sundry expense? 50, 50 into 12 or 13? 13, good, 650, then 100 into 13. So from this you should understand, you should be good in English before you solve the problem, or at least understand what is given in the problem. Read the problem full and solve. Is it for 12 months or 3 months? Okay, is it given weekly? How to work out? So those things be careful. Then by cash missing. I hope we recorded all the receipts and payments. So once again, 3 months. Don't take it as 12 weeks. Okay, 52 weeks into 3 by 12, 13 weeks. So this cash missing, on a prudent basis, we are going to charge it in which account? P&L account. Write the assumption for it. Then which account next? Bank account. To balance brought down. What is opening balance bank? 35,000. Bank account data to cash, that contra entry. One lakh 25,000. Then any other collection? Yes, bank account data to debtors account. The checks collected. What is the checks received? 10,000. Checks received 10,000. Then by creditors are paid by check only. How much? 75,000. Then rent, how much is paid? 4,000. Then any other expenses? By balance carry down, you can close. So we have prepared cash account, bank account also. Already they have given opening statement of affairs, debtors account and creditors account already prepared and closed. Next we can start with which account? Trading P&L account. Trading profit and loss account you can start with. Opening stock, how much? You can do it along with me. Opening stock 75,000, purchases 77,500. By sales, cash sales plus credit sales minus returns if any. That we worked out as a working note. This total sales based on the percentage we worked out. 1 lakh, 1,60,000 by closing stock. What is the closing stock? 32,500. Tally this, you will get gross profit. Already we worked out this also. 1/3 on cost, like that we added and worked out. What is the gross profit? 40,000. Then bring the gross profit. By gross profit 40,000. Any other income? No other income, right? 2 what? Salary. What is the salary paid? 3,250. Then sundry expenses, how much? 650. Then to rent. Check the thing. Yeah, here also 4,000. Look at the opening balance sheet. There is 1,000 outstanding expense that belongs to which year? Last year. Eliminate it. Then any depreciation? No. Cash missing. We take it as which one? Loss. To net profit balancing. Alternative assumption you can make is the cash is recoverable from whom? Cashier, like that you can make what? An alternative assumption also. What is the capital at the beginning of the year? That is given in the problem. What is given? 1,25,000. Add net profit less drawings. 1,000. So outer column. Then creditors closing balance. What is the creditors closing balance? 30. 32,500 is creditors closing balance. Then debtors balance
30,000.
furniture, no depreciation given, ignore it. Then stock, then cash at bank,
91.
tallied. Yes. Good. So we'll go for the lunch break. Okay. Whatever will be the time in your watch, 40 minutes from now. Okay. You can go to the canteen and have. Okay. Avoid having food in the hall because it's carpet. So you can have the food in the canteen or whatever, and you can come back and join. Live online students, we'll exit or close the meeting, then we will start in exactly 40 minutes from now.